Oh, copper's loved. It's not hated. Copper's loved. The problem is that we've learned to love it too late. Now, there's a lot of money to be made in copper. Don't mistake me. Because there's just no way that in the next 10 years we're going to add enough supply to matter. And I would suggest that there is still easy money to make. Easy is the wrong phrase. With some of these big discoveries out there, Atex, Marimaca, you're going to be 3 years before you're at the feasibility study stage. Then you got to permit the thing. Then you got to finance the thing. Then you got to build the thing. You got that whole boring part of the Lassonde curve in front of you that you have to suffer through. So probably people who are attracted to copper as opposed to using copper as a wrapper for speculation, people are already looking way down the chain. Ridgeline had a couple interesting drill holes. That's what changed with it. Too early to call it a discovery. But all of a sudden, the thesis that their intellectual capital could generate discovery has value, because it has. Whether or not the discovery is economic is something different. But that tells you the move in Ridgeline that's occurred. Well, it tells you a couple things. It tells you, first of all, that the stock is closely held and well held. The original financiers behind it, myself included, are in no particular hurry to sell. Like Nations Royalty, when you look at the number of shares outstanding, that's not the same as the float. The float is much, much, much smaller. And it takes a much smaller amount of buying to move the stock than would otherwise be the case because it's so closely held. Mondoro, I think, frankly, is a must rise. I just think the stock's too cheap. If you look at the fact that they're not a producer, but they're cash flow positive from exploration fees, and those exploration fees are paid by Rio and BHP and South 32, the biggest mining companies in the world. The biggest mining companies in the world have vetted this company, and they're willing to let this little company operate. Is that a guarantee that they're going to make a discovery? No. Is it the best possible indicator in the world that they're gonna? Yes. Is it cheap? No, it's felony cheap. Now, that doesn't mean that people who have less knowledge than I or are less speculatively inclined than I should buy it. That doesn't mean that at all. But it means that people who are reality as opposed to narrative oriented and can afford the risk should absolutely look at it.
Mergers in mining can reshape industries. A hypothetical combination of giants like Rio Tinto and Glencore would create the world's largest mining company, integrating coal, iron, and copper portfolios. Beyond scale, mergers reduce redundant management, optimize capital allocation, and increase efficiency. They also amplify market influence, index inclusion, and passive investment flows, stabilizing stock performance. By combining cash flow power and operational expertise, merged entities can fund large-scale projects previously impossible individually. For shareholders, this translates to potential long-term growth, as strategic consolidation allows companies to recycle profits into high-demand commodities like copper, shaping the future of mining markets.
I hope it happens. For your listeners' benefit, there has been on-again, off-again discussions about merging Rio and Glencore, two of the biggest mining companies in the world. The combination of the two would create the biggest mining company of the world. And it would create an absolute powerhouse in a few commodities. Coal, which the market hates, and coal does nothing but make money. Iron ore, where Rio is one of the biggest iron producers in the world. And it would create an absolutely enviable copper franchise, which I think is where the market's headed. It would do something else, too. Creating the world's biggest mining company adds brand and heft. It means inclusion in more indexes with a higher weighting, which means increasing passive buying. It means that those workers' paychecks who goes into pensions goes into that stock every 2 weeks, like clockwork. That stock begins to move in its own way, like Microsoft or Apple or Nvidia, albeit from a smaller base. That's important. It also gives the company the ability to do two other things that are boring but important. One is that by merging those two companies, you have the opportunity to eliminate some duplicate overhead. You don't need two CFOs. You don't need two COOs. You don't need two CEOs. There's a whole bunch of people at head office that become redundant. And reducing overhead relative to assets under management or cash flow increases earnings. It's the benefit of shareholders. The other thing that happens is often in companies, if they're opportunity constrained, they take a subpar opportunity because if they aren't building something, they themselves become redundant. The merger of those two companies allows for the allocation of capital over a much broader opportunity set. And if the decision-making process and if the implementation process is good, that can only be of benefit to shareholders. Recycling the incredible cash flow that they generate from coal, in particular thermal coal, and to a lesser extent that Rio generates from the Pilbara iron, into the copper business is as good a business plan as there is if they implement it. The global copper industry estimates that it'll require at a minimum $250 billion over the next 10 years, billion, to maintain current copper production, not grow it. Having the ability to build big mines, know how to do it, which Rio does, and having the free cash flow and the balance sheet to finance copper porphyry construction at $5 to $10 billion a clip puts them in a very, very exclusive club and puts them in a position to be substantially more valuable 10 years from now than they are today. It would give them a financial heft together that neither of them command individually.
Global copper demand is set to rise dramatically, driven by electrification and infrastructure needs. Experts predict at least a 3% compounded annual growth over the next 25 years, with billions needed to maintain or expand production. Only companies with large-scale permitted operations, proven construction expertise, and substantial balance sheets, like Rio, BHP, and Ivanhoe, can capitalize. New discoveries face long timelines. Permitting, financing, and construction can take years. Investors seeking exposure should focus on operational leaders rather than speculative juniors. The market isn't just chasing copper, it's chasing execution, scale, and immediate production capabilities, giving established producers a structural advantage.
Or a billion people on Earth who have no access to primary electricity. There are suggestions that copper demand will grow at 3% compounded, 3% annually compounded for the next 25 years. So that means that we don't need to replace production. We need to increase production. And, speaking to the copper trade, Daryl, I've said on your show before, we have underinvested in copper for 30 years. We aren't going to fix that in 5. It isn't going to happen. That means that there's going to be a price response. The people who are able to address that price response first will be the people with large incumbent production. Large mines which have been permitted and are built will capture that increase in copper prices before the people who need to build mines. But we're going to need to build mines too. Having the skill set to build a $10 billion mine, having the balance sheet to finance the $10 billion mine, and having the free cash flow to float that mine until it goes into production, is a huge advantage shared by almost no one. Oh, copper's loved. It's not hated. Copper's loved. The problem is that we've learned to love it too late. Now, there's a lot of money to be made in copper. Don't mistake me, because there's just no way that in the next 10 years we're going to add enough supply to matter. And I would suggest that there is still easy money to make. Easy is the wrong phrase. With some of these big discoveries out there, Atex, Marimaca, you're going to be 3 years before you're at the feasibility study stage. Then you got to permit the thing. Then you got to finance the thing. Then you got to build the thing. You got that whole boring part of the Lassonde curve in front of you that you have to suffer through. So probably people who are attracted to copper as opposed to using copper as a wrapper for speculation.
Smaller companies like Ridgeline or Arizona Sonora offer high upside potential, but come with elevated uncertainty. Discoveries must be proven, financed, and developed before generating cash flow. Conversely, majors like Rio, BHP, and Glencore are already producing, generating revenue, and positioned to expand. For risk-tolerant investors, juniors can yield outsized returns if discoveries are successful. For process-oriented, patient investors, established players provide steady growth and exposure to commodity price increases. Recognizing the distinction between speculative potential and operational reality is crucial. The smart strategy involves blending high-risk exploration with reliable, production-ready entities to balance opportunity and security in a long-term portfolio.
Should look at the guys who are already in production. They should look at the Amerigos of the world if they want a junior, or the BHPs, or the Tech Anglos, people like that. I believe that over 10 years, the beta in the copper business, which is to say the price performance of the best, will be between a 300% and 500% gain. And over 10 years, that's not unattractive, you know. In fact, it's really attractive. Now, the people who go to VRIC are often people who, for whatever reason, a 300% gain over 10 years isn't appealing to. They want to make 1,000% by Easter. The problem is it seldom happens. You know, it's kind of like the horny old guy who dreams about a nasty weekend with 3 Victoria's Secrets girls. It brings a smile to your face, but it's not going to occur. Wanting it is okay for 10 minutes at a time, but it gets in the way of making money.
Acquisitions drive growth when assets complement existing operations. An asset must either provide scale or synergy to attract buyers. Arizona Sonora, for example, benefits from proximity to existing mines, smelters, and infrastructure, making it a strong acquisition candidate. Competitive bidding can maximize value, and experienced operators like Robert Friedland bring both financing capability and development expertise. Even smaller assets gain value if aligned with strategic expansion plans. Understanding potential buyers, capital allocation priorities, and industry dynamics is key. For investors, following strategic takeovers can reveal hidden value, highlighting which juniors might evolve into the next cornerstone of the mining sector.
See, you're in the alpha game there, not the copper game. You got to finish those discoveries off. Then you got to finance them while you're permitting them. Then you got to build them. Nothing wrong with that, Daryl. But that's not copper. That's process. Copper is Amerigo or Teck or Glencore. People turn Ivanhoe, First Quantum. People turning copper into money today. People who will benefit from the increase in copper price without having to permit a mine or finance a mine or build a mine. If, as I believe, the copper price does well between now and 5 years from now, the guys who aren't producing any copper are only going to benefit in a narrative sense. The latent values that they exhibit are going to increase, but their free cash flow isn't going to increase. If you want a small company, I mean, it's up 200% in 3 years, but look at Amerigo. uh, permitted, built, producing, 30 years of reserves. So 10 years from now, when everybody wants to be in copper and they look at Amerigo, they got 20 years to go, right? It's not like it's going to run out.
Copper and other essential commodities are shaping a multi-decade growth story. Established producers, backed by financial heft and operational skill, are positioned to benefit from rising demand, while juniors offer early-stage speculative upside. The timeline matters. Building, permitting, and financing large mines is a long process, but the eventual payoff can be substantial. Investors should differentiate between short-term narrative-driven hype and long-term fundamentals. By focusing on cash flow, operational expertise, and market positioning, the smart investor captures both immediate returns and long-term growth. In the coming decade, those who understand the process, not just the promise, will dominate the market.
Gonna happen. Gonna happen. Now, understand, Craig's project, as an example, Vizsla Copper, there's a lot of work to do before it's a takeover target. It's a mineralized anomaly. It's an idea right now. It's an idea that's headed by a guy with great access to capital and a great track record. But it's an idea. With Friedland in Ivanhoe, you're talking about the fifth largest copper producing complex in the world. It's not an idea. It's free cash flow. With Ivanhoe Electric, what he's doing in Arizona, it's a deposit that's going to be built. And Robert is going to be able to build it. That doesn't mean, even though it's on private land, and even though Trump is president, that he's going to have an easy time permitting it. When that thing is permitted, and it will be permitted, I just don't know if it will be permitted on a timely basis, Robert will be able to finance it. He has been right so many times, and he's been right in the copper business so many times. You know, people forget the fourth largest copper mine in the world, Oyu Tolgoi, was his discovery. You know, I mean, the guy has been truly spectacularly successful. So he will be able to finance that thing. Your financial risk there is zero, and your permitting risk over time is zero. But that time frame might not suit you. I don't mean Daryl Thomas. I mean the people listening to the show. With takeovers, you need to understand that they either have to exhibit scale, which, you know, size. That leaves out Arizona Sonora because it isn't big enough, or synergy. The asset has to increase the value of somebody else's existing assets. And in that case, Arizona Sonora is right in place. You know, it's an asset in central Arizona, surrounded by copper mines on private ground, close to other copper mines, so that you could leverage existing assets, close to smelters, all that kind of stuff. When you talk about acquisitions, you have to look on a case-by-case basis and say, who would buy this and why? What else might they buy? And is something else a better use of their capital than this? Because if something else is a better use of capital, it's going to get snapped up first. Now, an absolutely natural thing might be Ivanhoe Electric and Arizona Sonora, almost adjacent. Zero doubt that Robert is uniquely qualified to get it financed and built. But mercifully, there's other players. Hudbay could be a player. South 32 could be a player. First Quantum could be a player. As long as we're going down the acquisitions rabbit hole, Daryl, remember that it's tough to have an auction with one bidder. So the fact that Robert might be a bidder is much more interesting when you think that Robert might have to bid against somebody else to get it done, which gets you full price.